leave you lonely with their sighs. 'Cause now staring right back at me, but they won't see me cry. This ride wasn't made for everybody, but it's for you.
Hello, how are you all? Jordan, are you still trading bankers? No, don't do any bankers, mate. Just supply and demand. Well, it's pretty much the same thing in my eyes, just obviously the entry points are slightly different. Mr. Goodman, how are you? Alfie? Didn't know you'd gone, mate. Yeah. Evening, Scotty. Yeah, cool. So, not really got much planned as usual, guys. So, not that I don't intend to like come on with no plan, but yeah, I don't. If I don't get any messages of you guys, then I don't really know what you wanted to cover. So, which I say every week. So, we could potentially look at some setups maybe from Discord, unless you've got something that you guys are looking at. TFT, where are we? Simple. This has got, this is Jake's, this is today, right? Yeah. It's EU, which I'm sure we'll cover anyhow. That's GU, pretty much identical, right? They'll move very, very similar. Mr. Fisher, look at this on EJ. EG. Okay, so we can look at EJ, I guess, right? Yeah, EJ 1 hour and EU for now. Okay, cool. So EU 4 hour. We break this down. Just delete all this from the 4 hour. I personally still think, well, we are still in this 4-hour supply in here, which obviously tapped into here and took that liquidity out. So yeah, great position to be in. Very wary of this, but until we break above here, above this yellow box, the black line of the box, because obviously that's the high, isn't it? Yeah, that's the highest point of this range. By the way, that's something I wanted to cover, so just remind me in a minute to go over. I don't know whether you guys have looked at it before. A thing called POC. Actually, I'll do it now. Okay, so a POC is a point of control, where typically mainly what it should be showing you is where most, or if not all, of the volume is traded. Okay, so I am looking at something currently. I've looked at this about 3 years ago, and stupidly again kind of turned a blind eye to it and left it be on the shelf. Yeah, so I've re-looked at it, and I've been on a few calls this week and last week in regards to this. It will need to require some software, but yeah, it's very, very powerful. So it won't be, I won't be doing anything until January with it, because it needs back testing and stuff. But it's nothing new. It's not a new strategy or anything. It's just an implication of being able to read the candles a lot more efficient. And if it does what it says on the tin, then I'm not even joking, it'll be an absolutely game changer. It's absolutely fucking fire. It's unreal. Okay, so back to the POC. So it's this sort of this, you'll find it in here. So the fixed range volume profiling. Okay, so people call it POC or volume profiling. So what we're looking for is to identify where the orders are sat. Okay, so let's just take, for example, we'll use another one now. So same as how you read a leg. Yeah, so if you to draw your Fibonacci, use it the same way. So from the highest point to the lowest point. Okay, so down to here, obviously in between the two lines, you see the two black lines then. Okay, so see this black line here and this black line here. That is where you are telling the reader to read between them two lines, sorry. Then you get the grey box. Okay, if you obviously want it to read a bit further on, then just drag it. And what that will do is it'll read the whole range, within that box, if that makes sense. Okay, so what it's showing is a lot of orders are stacked in here. Okay, so let me just change this so it correlates. Up volume, green, and green, and down is orange. Okay, so they represent the same as my candles. So obviously the candles are going upwards. This is, what do you call this? Vertical, is it? Horizontal, whatever it's called. Okay, so obviously this green candle here represents the upward volume. Okay, obviously the orange represents my downward candles. Okay, so you can see in here where most of the majority of the trades have been played out. Okay, you can actually double click on it. You can show the values. So this actually shows the actual order book volume within this section. Okay, so when an order goes in, it's done through an order book, sorry. Okay, which is what the banks play off. Okay, so it's an actual like I don't know how would you call it, how to explain it really, but it's like a file, an archive of orders. Obviously, thousands and thousands, if not millions of orders going in there. Okay, so every order goes into the book, into the folder, and then obviously portrays what it's currently. So down here, basically, we have 7,000 of green, and then 8,500 of orange, which is obviously downward move. So really, not much movement, not much volume, sorry, but a lot of movements. Now this is thin. Obviously, this is thin here. Yeah, because all we have is literally a fast-paced move, right? So where they are thicker, where the candles, the color of the bars are thicker, then price is hanging around a lot longer in that section. So it is sometimes handy to identify it, identify imbalance, because if you have a thin order book, that means price has been shifted by, obviously we know, the banks or independent hedge funders, etc. So obviously if you go to a thin area, which is obviously what imbalance is, because price has just shifted in one direction very, very, very quickly, obviously you'll find imbalance sections in there. Okay, it's not really what it's used for, but obviously I'm sure most of you can draw imbalance anyway, but just another sort of correlation to add up to your thing. So yeah, what we're looking for is obviously the volume of where price is. Okay, and ideally what you should be looking for on supply and demand sections is where a lot of volume is placed. Okay, because if there's not a lot of volume in this section, then it doesn't really make sense to be trading off it. Okay, so as you can see, it's one of the biggest candles in the whole, from the highest to the lowest, right? As you can see, if you just mark up this sort of range in here, so we carry that through, an easy way to do it is just use the an indicator, which is called PVP. Okay, so if you want to stick this on your chart, guys, then obviously feel free to. I have two that are identical, they're exactly the same. So one will show me, you can play with them. Yeah, so the input is, this is on a daily basis. Let's hide that one now. Okay, so the volume I'm looking at is on obviously a daily basis. Okay, it'll only go as far back as, what's that, 20th of July, it's quite far actually. Okay, and then it just shows us obviously where the most of that daily range. So obviously when the market opens tomorrow and we're looking to trade on Tuesday, then obviously on Tuesday, you'll be able to see where most of that volume is traded as of Monday, as in tomorrow, right? Just trying to look ahead. So let's just go off last week for now, so Friday. Okay, so what you find with this red line, the point of control is, it's similar to supply and demand, but don't go off that just sort of by itself, and don't use it just by itself. Okay, so you can see basically, and if you want to, you can do this. So take the red line, just put a line through it, just continue it through, and look, price is just sort of hogged around that area. Okay, then obviously price is done the same on a daily basis. I don't really use the daily one because it's quite obviously heavy for me, as I only sort of trade the 1 minutes. I think this one is based off 30 bars. Yeah, so every 30 bars basically this one is. Okay, so obviously it's the same sort of principle. Obviously if you click on it, it'll show you the values if you wish to have them on. I don't have them on. I think it'll just sway my decision. This one's a black line, so you can see most of the volume was traded through this level here. So basically how I use it is, if I was to get the pullback into here, another entry, I would be looking for price to take that low out, and then potentially take my money off the table here. Because yes, people say, well, go for the low, go for the highs and lows. Well, most of the volume, there's a massive, huge China wall stood there, right? And if this is used as support, which probably it will be, support and resistance, which I'm sure you guys understand, the price is going to typically trade from here, jump down into here, tap off there, go back up, which is fine. Obviously, you could be lucky and you could obviously then continue to drop, but you know, it all depends how you want to trade. Yeah, it really does. So it's just a nice way to choose a take profit area. This is obviously a strong magnet level, an area to go off. So I'd be trading it down to there. This is like, yeah, 70, 80 pip move. So that's fine. So yeah, just use that if you want it. This is the obviously indicator. Like I said, PVP, it doesn't cost. And then obviously you can have it manually done if you want to. So if you want to put it on. So the biggest move like this one, we would be from obviously where we're looking at now currently, take it all the way, make sure you're covering the low as well, right? And then obviously go all the way to the cross to the right there. Okay, that's just taking the whole range now. Okay, so obviously the most of the volume is clearly traded through here. Yeah, so if we were going to sell it, then obviously within that whole massive range, then there's a lot of volume through there. Yeah, that's obviously on the higher time frame. If you want to do it on a smaller time frame, that's cool. Okay, so if you want to go over there. Yeah, so this shows obviously thin order blocks up here. There's a lot more volume sat in this section in here. Yeah, I'm guessing that's why it's rejecting at the moment from this section. But like I say, because price did push off very, very quickly in here, it may very well show us that the banks are in here because they shifted price very quickly. Therefore, it shows there's not many orders in there because all that's happened is obviously the banks have shifted and nobody's had a chance to put orders in. Yeah, so it kind of swings on roundabouts. You can make your own sort of mind up and see how it works, if it works for you. Yeah, that's volume profiling. Don't know whether you looked at it before. So it's just basically being able to use the charts and the order books to identify an area. So at the moment, like I say, we're currently sat in this section here in the yellow box. Until it goes out of this yellow box, I have no interest to go to the next checkpoint or speed bump or whatever you want to call it. Okay, the next base, if you guys watch baseball, I guess, is it called? Yeah, stump, whatever it's called. Yeah, so in here, let's drop it down to 1. I do like how it's playing out. It's obviously rejecting well. This high has been held. It's not broken as of yet. You could have probably got an entry through in here after 1 hour. Obviously, the yellow we know is in the background is off the 4-hour supply. Okay, so the yellow there, it's 1 hour, and then to the 15. So you could have got it even tighter. Make sure you're covering the highest point, right? And then obviously the supply was obviously this can, well, I don't know actually. Yeah, so I'd go for the whole thing, pretty much. Yeah, so the lower this point before it, obviously that was the last upward move before it obviously rallied down and put the new low in. And if we carry that through, 15-minute supply, change the color of it, which you can clearly see we got, and this again is something else that's very, very popular. I do believe it's popular in supply and demand as well. It's very, very popular in smart money concepts. So you get a 3-drive pin, they call it. Obviously, you get your first drive, which obviously just taps into the space, into the green box, or the action, which obviously what it's doing is creating liquidity, a trap for the early sellers, and then obviously price starts to come back up again, and then takes them out, and then obviously we get another sweep again of the third one. 2 is very, very common. 3 is quite not unheard of, but if you do get 3 sweeps, 3 pushes, 1, 2, 3 pushes there, then yeah, it's a very, very good sign that obviously price is reacting from there. So if you missed that, obviously you got your order flow shift there, you got your breakthrough here. You could have caught this one, this green the orange one in here that took out liquidity. Yeah, so let's get mixed up with the smart money concepts then. So that would have been the SMC, right? That was the smart money concept. Just delete this. So this one would have been obviously the last up before the downward move, which obviously the supply and demand, which in this scenario it would have worked. That's what I'm looking at is this candle with the wick, because it took out liquidity right before pushing down to the lower side. So yeah, pretty much anywhere in there. And you obviously got a huge amount of wick reaction from here. One, you can just see it's a very strong. So even in here, you could be using, I'll just delete this. You could be using your volume profiling. So from your range, your actual candle that you're looking at down to here, let's just see where we come up to. So very thin up top. You get a slight bit of volume through here. I think it's different. I have to change the colors actually. I don't know how far that goes. Down volume. Yeah, so we got a bit of obviously volume through in here, which we pretty much tapped into perfectly. I'm sure on MT4, MT5 you did tap into there, but yeah, it's nothing. You can't really trade just off that, like I say, but it does help. Sometimes it doesn't. Sometimes it does. It's the same as using a Fibonacci or a key level or anything. It's just an added confirmation. You can't go and just trade it by itself. But yeah, the more obviously stuff we can use, the obviously more probable our trade's going to be. And you can clearly see the point of control in here was obviously through this section here. You can just see price is just consolidated basically, right? That's the whole point of the POC. What is showing is price is just consolidated in that area, which is not great for us. But what it did do then, come on, let me redraw that again. So if we mark this out, if we mark out the whole POC, what we did have was obviously this supply in here, that candle, yeah, which obviously gives a new push to the downside, then what created liquidity through here to be taken. It's obviously got taken, tapped into there perfectly, tapped straight into the supply, and then we pushed away from there. Yeah, came back up again to retest. We're currently sat right here. Okay, so I think I was looking at, let's go back to the 4 hour. Yeah, so I think that's pretty much done in there now. Unless we have something on the 15 maybe, replay. No, it's been tapped into there. Oh, I don't know. They're currently looking at price action of 15 of order flow. I really don't think it's going to make another sweep because currently we have had, looking at where we're sat now. This is our section through here that took that liquidity, that put in a new low. We had imbalance in there. So we tapped into there, like I say, 3 sweeps, which is absolutely beautiful, which also took liquidity. I really do think there's very, very, very certain there's going to be another sweep up to the top here. I would imagine we'll jump down now and into the wick of this. Let's see what's in there on the 1 minute. 5 actually. Yeah, there we go. That's my trade for this week. Yeah, so perfect liquidity, screaming to be taken out. We have this beautiful 5 minutes supply in here. And we're currently possibly creating a trend line liquidity, liquidity going on here. So we may possibly see price obviously do whatever it wants to do, tap onto this in here, and then obviously tap into our supply, and then obviously break and take all this liquidity out with it. Yeah, on the way down. Obviously we have that low to be taken, imbalance in here, liquidity through here. Yeah, so on the 4 hours, we could be looking at something to target. So obviously you could use the volume profiling. My first point would be somewhere in here, or this demand in here. Obviously, the best case scenario would be this here, even that down there. Yeah, so you could just drop and drop and drop and drop, but yeah, holding trades is definitely not for me. So that's off the 5 minutes. So I'd be waiting for that to happen. I'm sure a lot of you thinking, well, there's stuff in here and we can get something from here or here. I think, yeah, you can, but I just always think, well, if there's all that above, there's a good chance price is wanting to come back up, right? It may very well drop from here, and that's super frustrating when that does happen. But, you know, until that happens, I'll just set my alert there, then I'm good with that. Yeah, and it's not really that much of a move. It's only moved, that was pretty much news, wasn't it? So let's just say it's only moved 40 pips in 2.5 hours. Yeah, so from there to there is pretty much the same, 50 pips. So it's not going to take that long. Yes, I would imagine Monday, maybe we'll get our Tuesday high, which I covered about 2 or 3 weeks ago, if you're on, so the weekly cycle. Have you got anything in the chat? No. If you want to refine it, you could go down to the 1 minute to get a very, very, very tight stop loss, which of course would be that. Don't know what's on 30. I think that would be even nicer, probably. Yeah, even tighter again. But where do you stop? You know, I'm sure you'd be happy with a 3.3 pip stop loss, 4 pip stop. If you're going to be extra safe, obviously put it above the actual 4-hour swing high, which still would only give you about 10. It's a 13 pip stop loss, not major at all. Okay, so we do have them options. That's for you until that price comes up into there. Then, yeah, I don't really have much intention of doing much with it. You obviously could have that option or that option. Okay, so you have that. Even down to, I don't know, let's say these lows down here. It's a 6.3, and then that is a 14 to 1. Yeah, absolutely crazy. And like I say, if you use, that's a 16 pip stop, that's just under 12 pip stop. Yeah, so good potentials there. Would I? Oh, there is stuff in the chat. I missed that. A lot of red news this week. Okay. So Ali said he looks at the POC as well. Cool. I don't think you can get it on free version of TradingView, or has that changed? I'm not sure. You should be able to. On the left-hand side, you should be able to use the manual one. Yeah, definitely should be able to use this one. So where you've got your long and short positions, guys, on the left here, then you should be able to, the bottom one, so use the fixed range volume profile. Then yeah, if you don't have the paid one, maybe, yeah, I've got 6 obviously indicators on, so I don't think you can have more. Is it 1 or 2 you got the free one? Would you be waiting for the order flow shift and break your session in 1 minute, or enter from there? No, most definitely not entering from there. Don't just enter for the sake of it. I would be waiting for them. Yeah, always, no matter what time frame you're on, whether it's a 1 second or the 1 monthly or 1 yearly, whatever it is, you always need your confirmations. Yeah, without your confirmations, then they're not the confirmations that you should be getting into a trade. So you should be waiting for them to happen. Yeah, that's your tick box to say, right, yeah, ready, let's go. Okay, so tap into here. That's our low currently. And some people do actually wait for this to happen. So for this pullback in here, they pull back, then they wait for that to go. It's okay. It's not the best. Yeah, this is the most dominating strong low, that because typically what could happen from here, and what does really happen quite often, is some people think, well, it's broken structure now. It's not. Yeah, it's all this is really is technically is a pullback, because the most dominating low is still in here. There's nothing wrong with price just pulling back from here, pushing up again, pulling back, tap into that, and continue higher. Yeah. Price doesn't always just do this straight and simple. It's clearly not like that. I'm sure you're all aware. Okay, so yeah, I want that low to go. So whichever the low, put that high in, that needs to be gone. That low needs to be taken. Okay. Yeah, order flow shift, change of character, what you want to call it. And then obviously break structure is very key. Okay, yeah, you can enter if you want to, but it's a lot more risky. Very, very risky, to be fair. So if we're doing this, which means probably you get that's your obviously trap, you're in range inducement or liquidity or whatever you guys want to call it. Okay, so that's the pullback, that's the low now, that tapped into this space. I now want this low gone. Okay, it has to be gone. Okay, you may very well see this, a tap into there, reaction, a sweep, and then drop. Okay, that is clean because it's showing you price has tapped into there. It's then done a quick little jab and took whatever was above, and now there's no need to collect more apples from above, right? It's Danny on this. Oh no, he's in Lapland, isn't he? Yeah, so all about the apples, remember, because if we get more apples, we can have a bigger bag. Bigger bag obviously means more money. Yeah, not necessarily, but I'm sure you guys might get my drift. Okay, so from there, and then obviously a pullback into a newly formed supply or demand, of course. Yeah, tap into there. And then if you want to be super, super safe, you need to be waiting for the same thing again. So reaction from there, a tap in, and then a break again. Okay, and then it may hang around in here for quite a while until it obviously breaks this low, which frustrates me. I get out too early and stuff, but yeah, that's just something I need to work on. Yeah, keep it simple. If if this is on the 1 minute, which sometimes is not ideal. If you want quite a clean setup, go on the 5 minute. Yeah, you're literally going off. Obviously, the higher time frame, it holds more weight. If you want a super, super sort of very confident trade, you should be trading up to 15. Obviously, the 1 minute is all the 1 minute really is just the thousands of orders just plowing in left, right, up, down, up, down, up, down constantly, right? You don't really know where's what. So that's why it's very, very important to have a higher time frame analysis and a bigger picture to be playing off. So you do want that sort of rounded off motion, right? So all this in here, if you're on the 1 minute and you're watching it, it's giving you up, down, profit, loss, profit, loss, profit, loss, and then eventually, hopefully, it does go in your direction. But there's nothing wrong, and this is something I've started actually doing now. It's just wait. Yeah, there's no need. I just all this in here just pisses me off. Yeah, I'm thinking, do I get in now? Do I not? Just wait. Do I wait for the right sort of confirmations? Is that low? Is that low? Is that the new sort of pullback? Yeah. I can read obviously, but it's just too much got confirmations. Now, if you jump on the chart and you see this, you think, oh fucking hell, it's definitely reacting from there. I'll jump in, and it's a lot less stressful, I think, and it's a lot more smooth. You can clearly see now that obviously price has reacted from this section. You've got a new low, 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 and then obviously low, high, low, high, low, high, and then what you're waiting for is a nice little pullback into here. Yeah, and away you go. Now, if you get a pullback and it breaks that, then forget it. You don't trade it. Yeah, unless this is inducement, a clear screaming out inducement. Then we could be looking at something into this section here. You could be looking at there. But remember, yeah, just don't ever fall and be that inducement, that liquidity, right? It's very, very important. Never be liquidity. So yeah, that's what I would be looking for tomorrow. So where was I in here, right? Yeah, 5. Yeah, this is clean. It's nice. So yeah, just wait for that line to go off. And just play from there. What was Ali looking at? EJ, wasn't it? EJ. JPY. Very, very similar situation. Obviously, this is a higher time frame. That's obviously where the sweep was. We had liquidity here, sweep, and then put the new low down. Similar situation to EU. Yeah, so a lot of liquidity screaming to the upside to be taken. This is 170 pips away. Nothing major really. It's very, very similar, isn't it? And you also got that just above it, but same. We just got to trade what's in front of us. If this fails, then you use that as obviously a flip zone. Yeah. So if price taps into there, reacts, and then fails, then you use it as a new now formally formed demand. Okay. So you can use it both ways. Don't let it go to waste. Okay. So whereas obviously it was supply before, it fails, then obviously use it as the flip side. Just use it as demand. Currently, that would be the 4 hour. On 15, we do have, that's tapped into there already. Currently, price is being held up down here, I would say. Not really doing much, are we? Not broken that low, it's respected there. So remember, we're talking about Tarzan, right? Swinging from tree to tree. So that was the tree swung from. All this was in range, inducement, internal. And obviously that was the last minute inducement. We got a tap in here. So let's see what's in here. Okay, so you need to identify where the damage was, where that sort of connected to the start of the move. Obviously, the start of the move was here. Pushed that. We didn't really get a new low. That's what's concerning me. Okay, it's not really giving us. You know, that was the low that actually put that new, all that new sort of wave in, if you wish, that new structure, that new price action in. So that's holding a lot of weight. It's tested it a few times. So 1, 2, 3, 4, 5, 6, 7 times, 8, 9, 10, 11 times it's tested, 12 times it's tested that area. So me personally, I think it's going to just absolutely fail because it's been tested quite a few times, and obviously every time it gets tested, it's getting weaker and weaker and weaker. We are actually clearly pushing to the downside very strongly. So again, until this, well, if price does get back up into there, if that fails, then we're looking at something above. But for now, we could be looking at. Obviously, yeah, I want to see what's in here. That's the highest point there to there. Yeah, I don't really like that. It seems like an equal high to me. There's no, it took a small amount of liquidity there, but then sort of ran back up and created pretty much equal, perfect equal highs. I think they need to be ran. So possibly back up into, we don't know. We had, this is definitely liquidity. Yeah, I'm sure you'll get a reaction from here. This is a nice zone. If anything, you could just actually trade from there. So your stop loss above there is nothing. That's 25 pips, is it? 24, 25 pips. A bit big for me. But yeah, I just don't like it, especially because that low's not been gone. So that's been tapped into. Perfect equal lows there, ready to be taken. So price action wise, it's showing, it's giving you obviously stuff to be taken. Yeah, this here is just, I really don't like this. I think they're going to be gone. Tap back into here, I would say personally, and a little bit concerned because that is a liquidity line. Obviously the higher time frame. So yeah, but we never know until price comes into there. Then God knows what it's been doing. So like 4, 5, 6 o'clock on Friday, it's just done nothing really. If you want a fast sort of scalp, then you could be looking at possibly something here that did take liquidity, that ran and put in now new low. We did react off very big, but that's demand in there, reacted off there. That was your shift break, then came back and retested. That was the liquidity to be taken. Demand was down here. That was pretty much a perfect trade. Could have bought from there. Okay, but if you don't like it, guys, just don't trade it. Yeah, that's the bottom line, really. You know, if you're not keen on it, then it's not for you. If you think no, I'm not overly keen on it, then yeah, don't stress it. We do have this imbalance in here. We do have some huge volume amounts in here. Anything else? Any questions, guys? I just pretty much just look at EU now, to be fair. Just try and concentrate on one, and can be very, very successful off one. Look at Matt, he just trades German 40. That's it, all day, every day, since months on end now. Not jumping from strategy to strategy, not looking at stupid amounts of pairs. 2 or 3 is more than enough, to be fair. The EU, GU look at sometimes. Very similar. NAS I do a lot of scalping with, but yeah, that's pretty much it. So anybody looking at anything else you're marking up? Look at the chat. God. No, nothing. Does anybody want to? I'm guessing you've all sort of had time to go through the content on the website now with the supply and demand stuff. Does anybody have any questions about that? You guys are very, very, very quiet. I don't know whether it would be a good idea, possibly if you want me to create an Excel spreadsheet. You can put your anonymously. You don't have to obviously put your name in there. You can just access it via the Google Drive, and then obviously you can put anything. Literally, can you speak about this in the next live, or can you have a look at this, or I don't understand this, can you explain this, what's the difference between this and this? So it can literally just be anything. So I can just do an Excel spreadsheet, the topic, then obviously just give your description, brief description, what you want to cover, what you want to see, what you sort of struggling with, maybe a tool, how to use the tool, you know, could be anything. I don't know whether that would be a good sort of thing for you guys if you want to do that. Like I say, that'll be anonymously, so I'm sure you're all super shy until you have 5 pints for the next TFT party. So yeah, I know it's a big thing to come forward, so it'll all be anonymous. So if you do have any questions there and then, guys, in the week, just literally send them to me, the voice note, or just text them to me. There's a few of you now started to text me on WhatsApp, which is cool, a lot more. So yeah, the reason I use WhatsApp, I can just voice note you back, or I can do videos and send videos back to you. On Discord, it's very, very difficult, and I can't explain an 8-minute video on text. It's just, I could, but I'll be sat there for about fucking 80 minutes, not 8. Yeah, it's far too long. So I can just literally, if you send me your chat, what you're looking at, what your concerns are, I can literally just, I just have my phone here, and it records the screen or the chat that you're looking at, and I can just break it down or try and answer your question. Okay, so just do that. Yeah, if you've got any questions then and then, there's a very, very good chance you're going to forget them by Sunday or Monday evening. So just send them to me straight away. Just say, you know, before I forget, this is what I want you to cover on the Sunday or Monday. It makes our job so much easier, guys. So, because otherwise, I'm just going over the same thing. I don't really think you're getting much benefit from it, because you're not learning anything new. You're not looking at charts in a different way. you may be making the same mistakes, where if you just said something, it could be literally a very, very, very simple fix. Okay, so please, I'm literally like begging you, just start talking, start sharing your charts and stuff. Send them over, even on a Sunday afternoon if you guys have got time, even if it's like 5 or 10 minutes before the live, just send it over. If you don't want your name to be said, then obviously I would respect that. I won't call out your name or whatever. But yeah, if I don't hear for anything from you, then I presume you're all good and we can't help you. And I just presume that you're making absolute millions and making funded account left, right, and center. You're doing fine. Okay, so I know it's a struggle. So I'm aware that obviously it's not easy, but if you don't say anything, nobody can help you. Okay, so please speak up. Closed mouths do not get fed. Anything else? Yeah, don't leave the dark alleys, mate. They're horrible places. Badly. Okay, so if you're still going through the content, that's fine. If you're new, I don't know whether there's anybody new on here, newish, and obviously you'll have a fair bit more to go through, which is also obviously totally fine. I don't expect you to get all this at all. I've been trading just over 5 years now, and I'm still learning. I'm about to learn, like I say, some big stuff. Which, yeah, it could be absolutely huge if, like I say, if it works and it does what it's meant to do, then yeah, it's gonna be pretty awesome. Still working through it, Kieran. Currently making a bit of sense. Cool, mate. That's it. If it doesn't make sense to you, just leave it be and go back to it the next day or the week after, or write stuff down. That's what I found really, really helpful. Writing the stuff down. So I'd watch the video, I'd pause it and just write it down. Okay, and then I'd actually go back and rewind it, and then watch it again, and then see if it did actually make sense to me. Yeah. And then when you read your notes back, you think, yeah, I remember what that means. I remember what that means. And then as soon as you mark it out, so sometimes a lot of people just pause the video and then go on to their own charts and draw it out. It's pretty much the same. So just so you can see and get used to it. After you've done it like 50, 60, 70 times, you won't be able to not see it then. Yeah, it's just training your eyes. Alex, when price is in the point of interest area and you're waiting for a break of structure on a lower time frame, would you then change your stop loss to the break of structure high, or just leave it where you originally had it? So I'd alter it, yeah, to what suits I think is the highest of that section. Does that make sense? So let's just take this. This is on EU, right? One. I'm waiting obviously for price to come back up into here. So I will have an option of here or here. Okay, so as I don't believe price needs to go any higher. Okay, so I think that is the highest point currently at the moment, which is rejecting off that 4-hour higher time frame. Yeah, if price does want to go higher, then we need to adapt and sort of relook, or just leave it be. And then it's a loss, it's a loss, which is what it's meant to be. So yeah, I'd be, when price comes into here, taps into, let's say we tap into here. If I do get my right confirmations, you could obviously enter from here, and then, like I say, with patience and just being able to wait, you will actually get a better stop loss and a tighter risk reward. Okay, which this also adds confirmation to price not needing to go any higher, because again, it's reacting off these sections in here, these levels. Okay, so if price does do that, you then obviously got a new high. You got then obviously new lows, new lows, new low. Yeah, so you got your shift, break, and a new low. And we're looking at price reacting from here. If you want to be super aggressive, which I don't really recommend, there's 3 pip stop loss, which is very, very, very tight. even with EU and then low spreads. Just go like between 5 and 6 pips should be okay. This is obviously on the 1 minute time frame, remember, but if you're on the 15-minute time frame, you may have to go a bit higher to that other sort of high, if that makes sense. So yeah, just whatever you feel comfortable with. Don't go sort of doing this and not giving it enough breathing space, because yeah, you see on Instagram, but replay mode can do worlds of wonders. I could show you the best trade ever with like half a pip stop loss, and I did 100 in 4 minutes. Yeah, so it's easy to find the trade back testing, but when you're real life testing, you're better off just give it that fucking breathing space. Just leave it be. Yeah, it'll need breathing space anyway. And if you're not too sure, let it drop again. If you're still not sure in this section here, I think I'm not too sure, just let it drop again, because once that drops again, I guarantee you it's gonna have a pullback into. Sometimes it just comes up into this section in here, which I'm not overly keen on, but that just comes with time. Yeah, just being able to read the charts and what it's doing and how aggressive it pushes up. If there's imbalance in there, did this liquidity up here take liquidity, supply up here take liquidity out before dropping? It may pull back around halfway and then push down and then come back up again. Yeah, so just set your alarm like I'm doing now. I'm more than happy for this to drop another 1,000 pips and then come back up, because I'm pretty sure it will come back up into there. We just don't know when. Okay, so yeah, just keep on changing, altering. My biggest things you can see at the top here: adaptability. Yeah, you have to be adaptable in the market, because we all know it rapidly changes very, very, very quickly. No worries, Jake, take it. What sort of success rate you having with it? With this, honestly, I couldn't really tell you without looking at my what do you call it? My journal, which is in the office. Personally, I don't really go off success rate. And this could be right or wrong. Some people say you really need to understand and concentrate on the percentage growth side of stuff. Yeah, it's great if that works for you. Some people find it a lot better to look at percentage growth rather than the money side, because it doesn't affect them so much and they don't get attached to money. But for me, I have a plan. I have a monetary plan. I know how much I need per day. If I'm like, I don't know, at the moment it's 1,005, between 1,005 and 1,007, say. It was about 500, then jumped up to 1,000. Now it's up to 1,005. If I do like 1,390, then I'm not going to push the boat out. I'll just leave it. Yeah, so percentage wise, yeah, it doesn't really bother me. The percentage side of stuff, it really doesn't bother me that amount, because I could make 4% and you could make 80%. I could make more money than you. Yeah, because obviously it's the risk to reward. Sorry, pips. I'm talking about pips. Yes, it doesn't really relate to how many pips you get. So I could, like I said, I could make 4% growth off, I don't know, 3 pips or 10 pips, whatever it's going to be, and then you make, I don't know, 18% off 900 pips. So it does relate to the risk to reward. So the pips, people say, oh, I've done fucking 400 pips this week or whatever. The pips it's not relevant. So yeah, it's important. I think both is important. So some people say forget the money, just don't concentrate on the money. It's some people just don't like it. Some people tell you not to do it. That's how I work. I know at the end of the day, percentage doesn't pay my bills, money does. So if I don't get that money, then that's my goal. I need that amount of money. I need that amount of money to grow. I need that amount of money to put into my personal account, which I'm trying to grow. So yeah, at the end of the day, you need to know exactly, it's like 7% to you guys may be different to 7% to me. Yeah, you may have 5 grand, I may have 500 grand. So 7% of that is a huge amount of difference. Yeah, at the end of the day, will 7% of 5 grand pay for your Lamborghini? Or will 7% growth of 500 grand pay for Lamborghini or your house or your children's whatever bills or food or your fucking vet bill or your whatever it is, right? So at the end of the day, to me, it's about the money. Yeah, I don't get greedy. I have been in the past massively, and that's where I've learned a lesson hugely. So when I'm in profit, I'm happy to take money off the table. There's no way I'm giving that money back to the charts, to the markets. So yeah, like Matt says all the time, if it's blue, it's on you. Yeah, so if your MT4, MT5 is in blue in profit, it's up to you to manage that trade. Yeah, whether that goes and hits 1% or hits 11%, it's entirely up to you guys. So yeah, money side is for me. But if you really want a success rate, I would say I scalp a lot. So I do a short amount of moves, of high moves. So like in here, I would be waiting for price to obviously do its thing, tap into here. As soon as I get like sort of 3 swings, break, I'm happy to start selling from here. I'll have one sort of long one running. And then as soon as it comes to a comfortable sort of, let's say, demand section, I'll be taking off 80–85% of here. I've already moved my stop loss to break even. So if price does come back up, it's not the end of the world. But then if it does come back up to there, I'll be obviously watching it to see if it goes above, then I've got no interest in that section anymore. But I've made my money. From here to here, I'm happy. I've done what I want to do, or most of what I wanted to do for that day. Yeah, but then if it breaks again, I think, oh, okay, we're back on. Let's see what we can find. Yeah, so I'm really not fussed about catching these up here. Yeah, this is too much stress for me. It fucking gives me massive anxiety. My ass is fucking twitching. My heart is pumping. My fucking palms are sweating. Yeah, I'm getting palpitations. I'm just like, nah, fucking forget it. Yeah, there's no point going into like a trade where it's not showing you anything yet. It can literally come up to here and then bang, it could just fucking fly all the way up. Then you're massively in drawdown, or you've hit your stop loss. Whereas, yeah, don't get me wrong, it could pull back into here and still do the same, but you've got a lot more confirmations, right? The offerer, if you don't know what it means, order flow realignment, yeah, order flow realignment is realigned with higher time frame. This now is going in the same direction as the 4 hour. So the 4 hour, we can clearly see, is pushing in a downward direction. You now are using order flow realignment. This is order flow structure, right? Of the 1 minute, 1 minute now is going which way? In the same way as the higher time frame. Now you have 2 time frames in conjunction with each other, are pushing in the same direction. If you're broken down, do you want 10 men behind you pushing your car? Or do you want one man behind you pushing your car? The probability, unless it's Arnold Schwarzenegger, the probability you're going to get pushed even further with 10 men, right? So it's the same. Get as much time frames behind you. So all you're looking for is 1 minute to be doing this, the 5 minute to be doing this, the 15 minute to be doing this. And then you know the 4 hour is pushing on a downward move because you've already done that. You should have done before you even enter the trade. Okay, even though this is on an upward trend, to me, this is just a counter trade. This is a pullback, okay, of the higher time frames analysis. Okay, look at this. Get in here, sort of pullback in here, pullback. Well, let me just check. This does seem like a fairly big, obviously, pullback. Don't get me wrong. So this is why it is important to see how these sort of price ranges and these supply and demand sort of sections, see how they react from there. Yeah, and until you get your confirmations, because currently, if we're being realistic now, 4 hours since when? The 28th of September, this has just been pushing up and up and up and up, right? So this is bullish if we're looking at price action properly. Yeah, so if you want to be super safe, the highest point in this section is this. So until this low gets taken, yeah, there's nothing wrong with selling, but if you want to be super safe, then that needs to go. Okay, so I mean like that is gone, pull back, swing, and then obviously continues to the downside. Okay, but obviously that's on a higher time frame. Bear in mind that is a move from there to there. That's 103 pips. I can do a lot of money from there to there. And do you think there's a good chance price is going to get to that? I would say so, yeah. If not down to here. Okay, because all it's doing is mitigating off these orders, right? Which have been left. How long are you looking at charts throughout the day for this sort of strategy? So this is me done now for EU. Yeah, so pretty much Sunday night, I've done what I need to do. because all I'm waiting for now is price to come back up into this section, doesn't it? So until price comes into that, I won't even look at the chart. Okay, I may check it like for literally 30 seconds. I'm sure that'll be on my phone, just to see literally what's going on. Yeah. Now, if I check it and that low's gone, I think, oh shit, it's not going to come back up to here anytime soon. Yeah. But if we're still just fanning around in here and here and here, all I'm doing is just waiting for my alarm to go off. So, and as soon as it does, I don't know, as long as it takes, really. It could take 4 minutes, could take, I'm never more on the charts more than like, 20, 25 minutes, if that. And that's pretty much me done. But obviously it's just understanding the higher time frame, the narrative of the agenda of what the price is trying to do and where it wants to try and get to. Okay, so I would believe there's something in that wick. Obviously on the 4 hour now, if you jump down to the 15, there's nothing there at the moment. The 5, no, that was news, wasn't it? Maybe not. A 1 minute price, I see demand. It's been tapped into already, so we could see a push even further down. So yeah, that's like right in the middle, isn't it? So screaming to be taken out. So next point would be here, because this is just literally like liquidity screaming to be taken out. That's the same. Yeah, so in here, what do we have? 15. There you go. Imbalance to fill. Yeah, demand is down there with liquidity to be taken, literally screaming, ready to be taken out. Take that out. Jump down to the 5. Surprise, surprise. What do we have? Demand that did what? Swept liquidity and pushed to the upside. Liquidity to be taken. It's just starts protecting it. So that could be your target point. Okay, so before taking these trades, you need to understand the higher time frame, where you're trying to get to, why you want to get there, how we're going to get there, what sort of, who plays that game? What's it called? Pinball, is it? What it's called? It's a game, right? It's a goal at the end of the day. We're trying to understand how the market moves, and how do we want to get there? We should each have a strategy that works for you. And you can listen to me all day long. You can listen to me for fucking 5 years, but if you're not understanding what I'm saying, and also you only take 10% of what I take in, and you'll trade however you wish and however you like, and it works, then cool, awesome, crack on. You need to understand and adapt what works for you. Yeah, I cannot be doing with higher time frames. I don't hold trades for long. You need to understand how you trade as a person. If you're super impatient, if you're too busy, if you've got a super busy lifetime, if you are still working and you don't have 4 hours to sit on the charts, which to me is far too long, but I'm sure you get the point. Yeah, you need to understand, you need to stick to your strategy, you need to stick to your times, ideally the same time every day. And if you only have free between 7 and 9 a.m. before you go to work, then backtest. There's no fucking point backtesting between 3 and 5, because you're not going to be on the charts between 3 and 5 in the afternoon. Backtest between 7 and 9 a.m. That is the time you're going to be on the charts. Okay, because price moves in different ways at different times. London open. London Stock Exchange opens, and then we see price do typically 90% the same thing over and over and over every day. So if that's what you want to trade, then just trade that, backtest that, get your results. It'll give you confidence to trade that time of morning, because between 3 and 5, London's closed, about to close. New York has taken over. Price shifts in a totally different way. There's more volume in there. Okay, so it's really down to you to understand how you want to trade your pairs, how you understand that pair. What's the ADR? Can somebody tell me what an ADR is?
Average daily range.
Thank you. An average daily range. Yeah, how many pips does it move within a daily range? That's what an ADR is. Okay. If you don't know what that is and don't know how to do it, there's an indicator. I believe trade the range, something like that. Oh, not that one, but yeah, I'm sure you can find it. It just gives you the from high to low of that day. Okay, and it literally tell you and why is it important? Because you understand if gold, I know gold moves around about 280 pips points a day. If I jump on the chart on gold and it's only moved 20 points, I think, oh yeah, let's go. We've got scope here to take another trade. If it's shifted 270 points already, I think, you know what, it's done. It's not going to move much more, because I know the average daily range on gold is between 280 and 300 points a day. Yeah, so it's important to understand how it moves, what time it moves. So what wicks it, what upsets it, does it react to news? You know, what time does it react in certain ways? When do you get your typical sort of high of the week? Some pairs are different. You know, just because I say Tuesday, it may very well be fucking Thursday or Friday on a different pair. Yeah, I'm just telling you what I know and what I've been taught. Yeah, you can obviously take it on board and put your own spin on it, which I encourage you to do. Yeah, because you don't, none of you are me, and I'm not you. We're all different, right? So you need to trade how you want to trade, guys, and it's very important to understand how you are as a person. If you're impatient, do not try and trade the fucking daily or the 4-hour time frame, because you're going to be sat there, you're going to be forcing trades because you're too impatient. You're waiting for price to get down to here for a buy. You think, you know, fuck it, I want to take a trade. You're going to start selling from here. If price pushes down and it ends up doing that, you're going to lose a trade. Yeah, so just identify, if you're impatient, what can you do to do that, to stop over trading? Trade the small time frames. Yeah, the 1, 5, 15, half an hour maybe. Half an hour is quite a in between, obviously the 15 and the 1 hour. It's a nice time frame to play off. Okay, as you can see perfectly here, that's your half an hour. Yeah, it's pretty much the same as the 15, right? Because you had your liquidity taken, created, swept, and dropped. What would that have given you? If you entered off there, half an hour, stop loss just above, that's down into that demand there. There you go, one, bang, 4% growth in whatever that is. 12 hours, yeah, if that, 6, 7 hours. That's your trade done for the week. 100 grand account, 4,000 done on a Friday. Fantastic day. Starts for the weekend. Okay, because you didn't fucking try and jump in any of this in here. You didn't get stuck in any of this. Like, oh yeah, we'll look at this in here and look at this. Oh, you know what? We're gonna, as soon as price taps into this area in here, I'm gonna sell. What happens? Bang! It takes you out, because what? It wants to get up into the proper positions, right? So it's important, like I say, if whether you're watching last week, instead of my Fibonacci, I now have this. Okay, upper 50%, I'm happy to take a trade within that 50%. Okay, so sorry I went on a rant then. So it's hopefully it helps, guys. And like I say, any questions, just let me know. What time are we on? Yeah, if you don't understand stuff, please watch the videos. Most of the stuff is in the videos. Please, I don't want you to be asking me questions that's in the videos. If you don't understand it, then fair enough. But yeah, anything else, guys, please feel free to ask me. But other than that, we will see what tomorrow brings, right? Have a good night. Cheers, guys.